welcome. You're watching Business Today Television. I'm Sakshi Batra and this is our latest offering, What's Hot, a show that focuses on the biggest buzz on the day's trade. And as we enter into the fag end of 2025, all eyes are now on the new year, 2026. And everybody, all the investors are looking forward to this new year with new hopes of better returns, brighter prospects to make stunning portfolio returns going forward from here. Now, how do you achieve that? Is by understanding first which are the top triggers that could drive the stock markets in the new year 2026. What are the factors that you should keep in mind when you go ahead and invest afresh for your portfolios or rejig your portfolios to suit for the environment and the situations ahead in 2026? You all know how 2025 was marred by a lot of uncertainty. Right from the very start, we had a lot of external shockers that the markets have dealt with. Starting with the Trump tariffs, everything that went around on the social media front, it has in fact impacted the markets towards the end also. And as we inch closer to the cusp of 2025 and 2026, the one big question is, how soon can a US-India trade deal happen? Once that is done, will that give a greater clarity, something that the markets always vouch for in the new year? And in case that is the scenario, then how should you be well prepared right in advance to ensure which are the top sectors that you have in your mind before you invest? What are the kind of stocks that you should be betting big on? All of that we are going to be discussing on this special edition as well. Remember, we are also joined by a top market expert. We have Prashanth Tapse from Meta Equities joining in on this very program to help us understand and navigate through all these triggers and help you devise a portfolio that you will cherish for the next many years to come as well. Prashanth, warm welcome. Good morning to you. Good to have you with us. Well, finally, the Santa rally is gathering some more pace. The big question is, will this Santa rally spread the Christmas cheer that the markets had been truly waiting for a long time to come? Yet again, we are hitting that 26,200 odd mark today, 37 points higher, inching closer to the all-time high levels. But time and again, at least for the 5-6 times we have seen in the recent past, that every time we attempt or cross over the previous high, the selling pressure brings us back lower by 400-500 points or 1,000 points on the Nifty. How would on the Sensex, how would you really look at the current scenario that is inching towards a festive spirit that's really gathering some pace in the markets?
Exactly, and the viewers. Obviously, yes, the undertone has remained very positive from last many weeks at least. Whenever the levels goes to a technical resistance, there is some kind of selling pressure which are being on the back of some FI selling or many other factors. But again, whenever we go above 26,200, 250, there are some global events which occur, and sometimes we are ending in the weekend. So there is some kind of event which will keep the selling pressure on the higher levels. Obviously, I am not expecting anything big now, because the way how VIX is indicating us, there is no major event which is going to occur in this weekend or coming few days. Even FIs are on the holiday mood, so there will be not much huge selling pressure which are going to expected in the markets, which usually happens in the last few days of this financial year. Yes, but a lot of things are benefiting India. The rupee momentum, the RBI intervention, which is keeping some kind of positivity in the rupee momentum, which is helping Indian markets again. I think government action with respect to having a lot of FTAs, like 2 days back they did with New Zealand and Oman, I think Russia also. So we are just going ahead of not having a dependency of having a great deal with US and India. If that doesn't happen as per what we are expecting, we have a lot of other FTAs where the exports can be neutralized by sending something from India to those countries. And again, coming few days, I think in a month or so, we have a big budget going to be announced again on the Sunday, February 1st. Again, Q3 earnings which are going to start, and hopefully everybody is expecting the H2 would be better than H1, where there will be some kind of consumption story for all the reforms what government has done a few months back, September GST cut. Those impact we'll see in Q3 as well as in Q4. So expectations have risen. Valuations have been so much down in the mid cap and the small cap. Large caps have been slightly flat in terms of return as well as on the earning growth. So overall, everything is giving some kind of push for the equity market to stay positive. And the way how government RBI is helping us for a low interest rates, That is also giving a lot of corporates to have some good capex for next second half. So things are very positive. Yes, technical factors will get some kind of selling pressure, but again, the undertone is very positive.
Absolutely. The undertone is positive, and that's a good point to start off with when we start to prepare for the new year 2026. Now, what are the key growth triggers that you could be watching out for? One is the corporate's earnings recovery. That's something that we will discuss with Prashanth. Where do we see that happening first? Of course, that's likely to drive the market upside. The GDP momentum, how that will shape up, and of course, the upgrade potential that we have for the country. That could support the markets in case that could come in as well. The capital shifting from global AI trades to now emerging markets as well. That's something that we will be watching out for. The stable rupee, finally after the months of volatility that we have been seeing in 2025, could that aid the flows going forward and improve investor confidence in India? What we've already discussed, India-US trade, could that really act as a major sentiment booster as well? And of course, the continued strong DI and retail flows that could continue to provide the downside cushion. So let's try and understand all of these aspects. Which are the triggers out of these that you would give more importance to, and where the markets could draw in more insight from, Prashanth, in 2026?
I think the US-India trade deal updates will keep markets very much in check. So if something happens on a surprising basis where we can get a cut of 25%, which was due to the Russia crude oil business, so that will create a immediate upside or a gap up in the market, but that will not immediately give support to the earnings growth. So second important and highest weightage which I am going to give is on the earning growth. At least Q3 should be better than Q1 and Q2, where the earning growth with respect to execution, with respect to marginal improvements, and all the efforts what government has done from last February budget with respect to giving a tax-free income of 12 lakhs and then GST cuts and a lot of other benefits, which has not turned out to be an earning growth factor for a lot of companies in India. So Q3 earning growth is a major factor, highest weightage. One trigger for a upside would be US-India trade deal, where we will get a lot of clarity, the uncertainty will go off, and we will be better in the world to compete with China or any other good strong markets. So earnings as well as US markets, these two things will help the markets to stay positive for at least for short to medium term.
Fair point. Now let's also talk about the earnings recovery. What have you understood so far that we have seen in the last couple of quarters? And as we step into the new calendar year, where do you see the earnings recovery shaping up?
See, I think the capex was very low in terms of H1. So even the private capex as well as the government capex, that was very low. I think H2 will see some kind of incremental growth in the capex by the government as well as from the private sector. That will help the visibility in the sectors as well as in the stock. Plus again, the reforms what government has done, I think that will take its own time to reflect in the top line growth as well as on the marginal growth. So that will also be seen in the earning growth of Q3. So these are the two factors which I would like to prefer and wait and watch and see every data about the sector and then take a good call for 2026.
Right. Let's talk about the FII flows that have been rather absent in 2025. Prashanth, what are the cases in which you see the FII money return to India? Of course, the domestic story has been strong all through this while. It's the retail investor, the smaller investor, the investors who are investing via mutual funds, the DIIs, all of that money has provided cushion all through this uncertain time in 2025. Given the fact that the story could continue to be strong, what is the likelihood that we will see FII money also coming in as a catalyst?
I think again the discussion goes to the earnings only. There is an absence of earnings growth, what FIs are looking at. In the absence of earning growth, I think the valuations of the Sensex as well as Nifty and the broader markets are still expensive when we compare with the other Asian markets. So FIs are acting like a traders right now. They want some kind of a short-term return as well as on the upside when it comes to valuations. India valuations will look attractive once Q3, Q4 earnings starts giving some kind of comfort level in terms of EPS growth, which will drive the FIs to come back to India in next financial year. I think even they are waiting for the US and India trade deal. If this uncertainty continues for March, I think they will never come back until at least March. So we should give some kind of confidence for the FIs, showing that despite all the tariff war or all the pressure, we have a lot of fundamental data points which are very stronger and even supported by good earnings growth. If these factors match, I think they will start turning back to India.
Fair point. Let's now talk about, what could be the key risks to watch out for. That's also essential to understand so that you can protect your investment well, informed, when you are talking about the risks that are at play, so that, immediately when that risk surfaces, that you are able to identify that risk and are able to take informed decisions about your portfolios as well. What are the key risks that you find, for the markets in 2026, Prashant?
I think again the uncertainty with respect to wars, again the way the peace talks have been happening with respect to Russia or Ukraine or any other new countries which are developing their tensions right now. I think if that again rises to new levels, I think that will continue to keep a lot of pressure in the equity as a segment and in the Asian markets, where gold and silver will also have a continuous rally towards new highs every day. We have seen from last many days, many months also gold has been done. So these two things, uncertainty with respect to the uncertainty of the world war. Again, a lot of other economics like Japan, which are increasing their interest rates, which will keep some kind of pressure for the global fund managers to allocate their money into the Asian markets, and otherwise
Correct.
they would like to take out more money from Indian markets. So these are the two risks. Again, last risk could be again execution with respect to Indian companies, absence of earnings growth, which have been highly expected right now. That's the only hope where there is a re-rating, can be done for any lot of sectors in India. If the absence of earnings continues, which we missed in Q1, Q2, and Q3, so that's a big major risk for next financial year again.
Okay, fair point. Let me also ask you now, when it comes to the key strategy that you are devising for your clients at this point in time for the year 2026, what are the top 2 or 3 things that you are telling clients how to go about the new year?
So I think first of all, cut down the losses which you have done from last 1 year, 2 years, and please allocate some more things to the gold and silver. So we have always missed to have allocation in the gold and silver. So there can be a direct or indirect allocation to the gold, which will save some kind of losses or making a alpha return in the portfolio. So I think that should be one thing one should do. And then again, don't allocate everything in one stock or one sector. So there should be some kind of diversification, allocation of fund in each and every sector. So these are the things which we missed last time, and we have seen our portfolios majorly heavyweight towards the mid cap and small cap. So that has to be reduced. Again, large cap has to be given some kind of respect in your portfolios at least. So we need to behave like a flexi cap fund manager. We need to keep on shifting your large cap, mid cap, and small cap whenever the market trends move around the momentum. So that is what we are missing, and I'm recommending the same thing to my clients.
Okay. And now let's come to the fact, viewers. Then we will help you understand the top sectors, the top themes to track in 2025, and the top stocks within those themes that you can bet big on in 2026. So let's start off, Prashant, with the first sector or the theme that you are going to be looking at very, very categorically in 2026 that will show some outperformance.
I think one sector which is called as mother of every sector, which is called as banking and financial sector. So I think that would be one sector where I would like to give a good 15-20% weightage in the portfolio if you are constructing it for a new thing. So I think this sector is looking very strong right now with respect to valuations, with respect to government support, where liquidity has been increased. So credit growth can be expected very soon. And the way how going forward, I think a lot of housing sector is going to have a good boom. A lot of financial services like credit cards and all. So those sectors are getting a lot of traction right now, the way how people are spending, and digital financing is a sector where I think the next 1 year as well as next 5 years will be a sector one should focus more on, and you should have a good weightage on banking and finance. In this sector, I think I have two major stocks. Again, both are again the heavyweights. I think HDFC Bank as well as SBI Bank. Why two these banks? I think I would like to have a good weightage for private as well as on the PSU banks. SBI Bank is strong in terms of reaching every nook and corner of Indian pin codes. I think that will drive the business and then the growth in the earnings as well. So I think for SBI, I am very much positive from last many quarters again and for many years also. So long term bet, SBI would be a good stock. HDFC, why HDFC? I think HDFC will have a lot of housing sector growth, which I am expecting 2026 and 2027, where housing sector will see a lot of growth in terms of their home loan and all. So that will have a very strong impact on the asset quality of the bank and as well as on the long-term outlook on HDFC Bank. So these two stocks, I think, one should go with. With respect to targets for HDFC Bank, I think HDFC can see a 1 year target of 1100, 1120 from the current levels, which is around 998 around. So with a stop loss of 930. And with SBI Bank, again, very comfortable to see again 1100 rupees target from the current levels, with a stop loss of 930, again, same levels for both. So both are behaving in the same manner, one in private, one in PSU.
Okay, got that. So the first sector that you will see continued performance in 2026 is the banking and the financial services sector, that is looking forward to garner some more strength in the new year. So this is the sector that you have to definitely have an exposure to in your portfolios when you move into the new year. In this sector, Prashanth is chosen the best of the private sector bank for you and the best of the public sector bank for you, which you can comfortably bank on even right now. You've already seen HDFC Bank up by about 10-11% in the last 1 year, SBI up by about 20 odd percent, and he actually believes both these stocks can actually achieve a target of 1100 plus in the new calendar year, that's 2026. So BFSI as a sector you need to focus on, and within that sector you can definitely look at these top private sector as well as the public sector banks. Let's talk about the second theme now. Which is the second theme you've chosen for our viewers in 2026?
We are in the capital markets, and I think we should not miss capital market stocks in your portfolio. One should have a very proxy kind of approach towards Indian economy, Indian capital markets. We are here for the long term, and obviously all these major stocks like BSC, like Grow, Angel, as well as Nuvama, these are the four stocks which I have picked in my portfolio, because when you invest in BSC, you are actually buying the whole market as well. So that will give a lot of support for earning growth, where every trade, every momentum, every volatility will create some kind of earning growth for BSC. Again, second stock would be Grow. We know the market share of Grow, which is almost 25-26% in the capital market. So whenever market have a good transactions in terms of wealth, in terms of buying and selling of shares, I think that will create a lot of business earning growth for Grow. I think very positive, and we have seen how the performance post IPO, we have seen it. Again, third would be Angel, the second largest in terms of digital broking company. Angel, I think we have seen a good correction in the price, so downside is limited from the current levels, and I think upside is also good in terms of risk reward ratio. So again, Angel would be a third stock which I am focusing more on the portfolio. Last would be a pure wealth management company, that is Nuvama. I think that is the best company which I am considering in terms of wealth management businesses. So I think that would be a fourth stock. If you have these four stocks in your portfolio, I think you are covering majority of the whole proxy for capital market growth. If you are here for long term, I think this four stocks should be in your portfolio.
Okay, let's actually look at the long-term targets that or upside that one can really garner in these stocks. So capital markets glory could continue even in 2026. Remember, there's also going to be a high anticipation of NSE IPO that could be coming in into 2026 as well. That could also bring all the attention back to the capital market story. And of course, that is the highly anticipated IPO. It could be a mother IPO that one could be looking forward to. We've already seen how BSE has outperformed in the recent past and has created a lot of wealth. Now talking about NSE, there is even a greater anticipation on that front. The four stocks that Prashanth is looking at is BSE, Grow, Angel One as well as Nuvama. Let's try and understand what could be the upside here, Prashanth, for all of these stocks.
I think BSE, I think from the current levels, 3000 plus can be a target which I am expecting for next 12 months from the current levels. With respect to Grow, again a new high about 200 rupees per share would be a target from my side on Grow. With respect to Angel, again a 3000 would be a sentimental target where I am expecting to have in next 12 months. With respect to Nuvama, again 8200 can be a price target for Nuvama in next 12 months.
Okay, fair point. So there is a lot of upside that even now you can bank upon as far as these four stocks are concerned. From the capital markets exchange related stock, you have a recently listed Grow stock, which has also been one of the key stocks that we have tracked from the IPO as well. It had a lot of subscriptions as well as a listing gain that people went on. Angel One has already proven to be a wealth creator of the past, and so has Nuvama been a great stock that we have actually looked at from IPO up until now. All of these stocks could continue well their performance. Let's talk about the third key sector that you find promising for the new year now, 2026.
I think that would be something in the real estate space. I think real estate would be one space where we have seen some underperformance. But again, the stocks which I'm going to recommend would be stocks which will be very much high in terms of corporate governance, plus very strong in terms of their pan-India presence. So I think that would be one sector where even government has focused a lot of infrastructure growth. Even a lot of support has been given through RBI with respect to cuts in the interest rates. So that will drive a lot of real estate stocks to perform well in next 1 year. So first stock would be Godrej Properties, again best in class, high corporate governance, slow but again a good wealth creator for long term investment. So I think from the current levels 2035, I think with a stop loss of 1940, I can see a target of 2400 for next 1 year from the current levels. And with respect to DLF again, with the current price of 700 around, and with a stop loss of 630, I can see a target of near 900 for next 12 months.
Okay, got that. So there you have it, the real estate sector, which has not been an outperformer in 2025, but finally could show some promise and return into action in 2026. And out of these, we have actually seen Godrej Properties already had a good run up in the first half of 2025. It could well continue the momentum in the new year as well. DLF, however, has lost about 17% in the kind of value that we have seen. Even for Godrej Properties, down about 28% because of the drag that we actually saw in the last 6 to 8 months odd completely, and therefore you do see that dip coming in. Finally, there could be a lot of upside because fundamentally things are solid, and there could also be newer triggers that one could be betting big on in the real estate space for Godrej Properties and DLF, two stocks from the real estate pack that you can definitely look at. Which is the fourth theme that Prashanth you are tracking for the new year?
I think one should not miss the new age business models, which we are seeing from last many years. Everything is good going on right now, but again, people or investors would like to have some kind of high growth stocks in their portfolio to get some kind of extra alpha in their portfolio. So I think two stocks again, not Angel, Ather Energy. We have discussed this many times on your channel. So I think I'm very much positive on this. Again, we know the reasons, the product, the management, and the way they are penetrating pan India in competition with Ola as well as the traditional brokers. So Ather is going to do very well from the current levels. Even the stock has done really well after the IPO. This is one IPO which has given a multi-bagger return about all the 50-60 IPOs which were listed in last 1 year. So Ather would be one stock very bullish on. Second would be again Lenskart. We also discussed this many times on your channel again. So Lenskart again, I'm very much bullish on the pan India presence, the digital way they are focusing, and obviously they are expanding as well. So I think yesterday also they have done some expansion in the out of Indian business outlook. So I think that would also give some kind of good business growth. I think next 1 year the stock can do really well. Yes, earnings are the factors. We have seen how surprisingly they have given their Q2 earnings few weeks back. So I'm very much positive on these two sectors when it comes to a new age business model in your portfolio.
Okay, fair point. So viewers, you love them, you hate them, but you cannot ignore the new age businesses. That's the clear mantra that all the investors and analysts are following right now. New age businesses are the clear flavor. And interestingly, it's not just Zomato and Swiggy now. It's the recently listed stocks that Prashanth has chosen for you. Ather Energy has been an outperforming stock, one of the best IPO performances that we have seen, and the listing, post-listing move that we've seen on Ather Energy. That momentum could continue in 2026. Lenskart, that was in the grip of a lot of hot debate on the valuations front, swiftly moved up, beyond that and tried to find its way up. And that stock could also continue to perform looking at the earnings trajectory that the company promises to have going forward from here as well. So Ather Energy and Lenskart from the new age businesses could well be on track to give you higher returns in the new year. Let's talk about the last and the fifth key sector that we are going to be tracking for you viewers from Prashanth, the sector that you could be looking at for 2026. The last one, Prashanth.
I think that would be manufacturing, where we are thinking to have a manufacturing based hub of this world. India is targeting to be the next China of this world. So I think that is where India is thinking. So make in India or make for the world would be a theme one should have in your portfolio. So I think considering this, the EMS segment, the largest in the segment, I think Dixon Technology would be one stock which I am seeing a very great fortune for these companies. Despite the correction in the prices, I think there is a huge opportunity to see a lot of global good brands are coming to India, and they are approaching Dixon to have their outsourcing model with Dixon Technology. I think that will trigger very soon. I think quarter on quarter there will be good decent growth in terms of top line as well as on the bottom line as well. So Dixon is the one stock which I am focusing well. I think the management is really strong in terms of future growth, and also I think that would be one stock one should focus more on. And second would be HAL, a PSU defense stock, where I am thinking this can be a stock where manufacturing for the world theme can work for this. I think in a few weeks, few months, I think Russia will have some kind of discussion with India with respect to having a JV to manufacture a lot of aircrafts. I think HAL can be one candidate which can be a right product, right partner for Russian JV in India.
Okay, fair point. Viewers, manufacturing, the Make in India theme may well continue with the government's focus on increasingly looking at adding more and more sectors here, constantly talking about making in India for the world, India becoming the next manufacturing hub of the world as well, and that's the clear focus, and that could definitely be a theme that could be ongoing in 2026 as well. So within this space, Prashanth has chosen two stocks for you. One from a theme that is just now in a nascent stage and is gathering pace, and that's the electronics manufacturing. We've already seen Dixon Technologies rally very, very sharply from in the last couple of years, although some consolidation took place over the last 2 months here in this entire space, but Dixon could well continue to perform is what he believes. And from the defense pack, that continues to be a focus area of the government as well. We have seen over the last couple of months how the Defense Acquisition Council has been constantly giving bigger orders, and these companies have also come back into flavor in the last couple of sessions as well, rallying yet again sharply across the shipping space, across the HALs and BLs of the world. You have seen some more momentum gathering pace, and there could well be an outperformance from this space as well. All right, so the quick recap that we want to share with you, viewers, from what Prashanth has shared with us. The top key 5 sectors that could well be outperforming sectors of 2026 will include BFSI, capital markets, real estate, new age businesses, and manufacturing. Within the BFSI sector, Prashanth has chosen for you HDFC Bank from the private banking space and SBI from the public sector bank that could continue to perform. From the capital market story, he's chosen 4 stocks from you. This is BSE, Grow, Angel One, as well as Nuvama that could continue to perform well in the new calendar year 2026. Let's talk about the third key sector that Prashanth is bet big on, and that one is real estate sector. Within the real estate sector, Prashanth bets big on Godrej Properties as well as DLF as the 2 stocks that you could definitely look at as far as betting big on is concerned in 2026. The fourth key sector is the new age businesses that he believes Ather Energy and Lenskart are well placed to continue to give you higher returns in the new year. And lastly, the manufacturing and Make in India theme that could see from the front, Dixon Technologies and HAL leading the rally in this space as well. Thank you so much, Prashanth, for being with us and, of course, giving a broad understanding to all our viewers as to which are the concentrated sectors that one has to keep their attentions on and how to select some of the stocks that could well outperform and give higher returns in the new year. Season's greetings to you yet again. Happy Christmas for tomorrow as well as upcoming New Year as well. We'll definitely catch up soon with you on another edition on Business Today. Thank you so much. With that, viewers, we wrap up this special edition of What's Hot right here. Do stay tuned with us onto Business Today Television as we continue to get you such fascinating insights and understanding of how to prep well ahead of the New Year 2026. Stay tuned with us. I'll be back for the 12 noon show of Daily Calls.
Good afternoon, ladies and gentlemen. A very warm welcome to you on Business Today Television. We are at the fag end of 2025, which has turned out to be a not so good year for equity investors. If you're in large